what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Yo, good morning, everybody. Happy Monday. Welcome to the morning show. It's the best morning show in finance. Spencer Israel here with JC Parets and Steve Strazza. Hope you all had a great weekend. It's a little bit cold and rainy here in the greater New York City area, but that's all right. Markets are opening, so we're in a good mood. What's going on this morning? What's going on, everyone in the chat? Philip, Frida, Rachel, Ravi, Ken. Good morning, everyone. How we doing? Good morning, everyone on Twitter as well. If you're watching over on Twitter, hop on over to YouTube, smash the like. We'd appreciate that. On today's show, let's see, we got Berkshire Hathaway. They're the only company that can get away with reporting earnings over the weekend. We'll talk about them. The question we're posing, though, is the rally over for tech? That's the question of the day. Guest today, Larry McDonald, author of the Bear Traps Report. Very excited to have him on the show. He is at Convert Bond on Twitter. Great follow there. Kimmy Sokoloff is always at 9:15. And that's it. Jay-Z's here. Strazza's here. You're here. I'm here. Let's start the show.
All right. Good morning. Good morning. Happy Monday, everybody.
Hey, guys.
You know, I really, I feel bad for people who on Sundays are like, oh, tomorrow's Monday. I can't wait till Friday. Like, imagine living your life that way. That must suck.
Sundays.
Imagine like your life is so miserable that like you just, you dread Mondays and you look forward to Fridays. Like, if you're one of those people, like, stop. Hard stop. Like, just what are you doing?
I've definitely been there, and that's probably most people, but it's nice to look forward to a good Monday sometimes.
Are you kidding me? I'm looking forward to Sundays at 6. Let's go.
Wait,
you know what I'm saying? I'm at my in-laws' house a lot on Sundays, or they're at my house or something like that, and like they all know. And even my daughter, I'm like, what do you think? Is the market going to be green or red? Every time I ask her that, she's 3 years old. Every time I ask her that, she always says green.
That's why I like her so much. She's got that perma bull blood.
Strazza, nice haircut, man.
Thank you.
Yeah,
Spencer needed it. He was getting wolfy.
I noticed.
Well, was in Asia for almost 4 weeks. Sorry.
Well, so I think we should get a little state of the markets going there, Spencer. No,
we can do that.
I think we should.
I'm not opposed to it.
Okay.
All right, so we're going to talk about the state of the markets currently from where I'm sitting, and everybody here, stay tuned because I got a heck of a recess for today. Strazza, I was at a mall yesterday. So I've got some, mall, M-A-L-L. For you youngsters, they used to be these things with a bunch of stores.
Yeah,
humans would hang out there and like interact with one another. It was wild. Yeah. So anyway, I went to one of these establishments yesterday, and I have some opinions, as you can imagine. So stay tuned for recess at the end of the show. In the meantime, doing some charting over the weekend. Strazza, I've been known to do such things, right? Yeah. Billy wants to know if I'm still in the PayPal. Thank the Holy Lord, I am not. I'm not. What, you are?
Yeah, I gotta get
that. No, I am not. I had options. I don't like to do that sort of thing going into earnings. Okay, can we talk about this situation here with technology making new multi-month lows on a relative basis? Is this it, or is this just a nice little correction? That bearish momentum divergence is nasty. Even the biggest perma bears on Wall Street, like these sell side analysts that just swung and completely missed, and imagine this, Strazza. You are a client of a financial advisor, and your financial advisor has been telling you over the last year to not buy stocks and to raise cash because your idiot analyst is telling you that that's what you should tell your clients. Like, imagine being one of those clients. I know I wouldn't be too happy. Imagine as a financial advisor doing what the analyst told me to tell my clients and screwing everything up. Like, I mean, who's more frustrated, the advisor or the client, right?
No, I'm with you. And a lot of people probably came pretty late to this bull market. And
Now they're all like, oh, no recession after all. Da 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 da. It's like, yeah, bro. So anyway, now that everybody's like, oh, okay, maybe this is a bull market after all, now you get the nice little rug pull and everybody blows themselves up. It's a beautiful thing. And I'm also noticing, you're getting a lot more people getting more leverage because volatility is so, was so low. So you're getting leverage. So, you're making a little bit of money. You're making a little bit of money, picking up those pennies in front of the steamroller, and then you get wiped out in a week, right? It's a beautiful thing. So the question is this just the beginning of more rotation? Because again, this rotation out of tech has already been happening for a couple of months now. We're making new multi-month lows on a relative basis relative to tech. How bad does it get to tech? I think that the ability for technology on a relative basis to not get oversold, Strazza, I think will be a big tell. So this is a 14-period RSI. For those of you not familiar, email in. Spencer will send you a little primer on how we use momentum and how we use RSI. So email Spencer. Spencer, come on in for a second and tell the folks where they can reach you so they can you could send them the primer on RSI and momentum.
You can always email us if you want to get the primer, even if you just want to say hi. You want to say hi, too. Email us. It's on the screen. Questions at StockMarketMedia.com.
Happy to send you how we use momentum. I find it incredibly valuable. After price, price is the most important technical indicator, right? I get asked this question all the time. The answer is price. The second most important, I would argue, is momentum. So this is a big one. So anyway, 30 is oversold, 70 is overbought. Strong uptrends, in bull markets, if you will, you don't see oversold conditions. You see a lot of overbought conditions. In fact, look at this chart. Technology relative to the rest of the market has been getting overbought a lot all year. Overbought conditions are not a bad thing. How can an overwhelming amount of buying pressure possibly be a bad thing? People are like, oh, JC, I can't buy it because it's overbought. It's like, bro, that's a good thing. That's why you should buy it, right? Not just tech, but just assets in general. So if you think something's in an uptrend and you're seeing some oversold readings, you probably want to reevaluate that whole thesis. Why don't you show technology relative to energy now? Here we're looking at the XLK relative to the XLE. So this is technology stocks relative to energy stocks, making new multi-month lows, looking worse for tech than tech relative to the overall market. In other words, if tech is Tiger Woods or Phil or whatever, and you're doing one of these what do they do, the Masters pools, Strazza? You see, you're a Connecticut hedge fund guy. I bet you did quite a few Masters pools over the years.
Oh yeah, they're a blast.
Yeah. Like you pick one from like the top tier, you pick 2 from the second tier, and 3 from the third tier. Is that right?
Sure.
No, is it not like that? I haven't done one of these in a long time.
I think so. Yeah, it's been a while for me as well.
And then you got, I think the third tier is like the field or something like that. Anyway, so of the field, energy is really outperforming technology, as you can see here. And by the way, much closer to oversold conditions, right? So the question is, if not tech, then what? Look at energy relative to large cap growth, because technology doesn't tell the whole story, because Tesla, Amazon, Facebook, Google, none of those are tech stocks, right? So why don't you show energy relative to large cap growth there, Spencer? And you could see here making new multi-month highs, energy relative to large cap growth overall. So not just tech, but kind of that group that has led in 2023. And remember, this entire bull market has not been growth. It was just this year, right? It's just the first 6 months of this year, because the back half of last year, virtually everything was working except for mega cap growth, right? And then you got that rotation into this year. So now we're getting back to that former rotation. So by the way, on another note completely, I would encourage all of you guys to, did you listen to, Strazza, did you listen to the Compound and Friends with Mark Fisher?
I didn't, but I've seen it and it's on my list.
Well, you were busy. You were doing family stuff this weekend after a month in Asia, so I forgive you. But if another day goes by and you haven't listened to it, You're really doing yourself a disservice, Strazza, and I can't let it pass. I'll give you the pass because you were busy doing family things. I respect that. Get involved. This guy, Mark Fisher, you guys just don't. People who know me, a lot of people wonder like where. And we can drop the link. Spencer, I'm dropping it in the Slack. If you could just put it into the chat. A lot of people, wonder, JC, what book do you read to, teach you this or teach you that? Most of the things that you hear me talk about and you see me do here every day, I learn from other people. And Mark Fisher is one of those people who has inspired my work. I don't want to say more than anybody else, but he's definitely up there. Like you've got the authors like Edwards and McGee and John Murphy and those guys and Charles Dow and Leonardo Fibonacci. And you got all these, people who predated me. And then you have people who are slightly older than I am, in Mark Fisher's case, 20-something years older than me, but people who are still doing it and have influenced my work a lot. Mark Fisher is one of those. I hear him say certain things. I'm like, that's where I got that, because you forget where you learn certain things. And then I was like, yes, so great. He's fantastic. So I would encourage you to go. Did you drop the link there, Spencer? Yep, you did. So this is Mark Fisher. Excellent. And he wrote a book called The Logical Trader, where he talks about you read that?
No, I've not.
Check it out. It's not so much like a beach read per se, but more of a how-to, like pivot levels and things like that. It'll help you kind of understand. And he focuses a lot on commodities, which here we are talking about some rotation into energy and out of those commodities. Into energy and out of stocks in general, where commodities are sort of resuming their leadership. Can you throw the S&P CRB chart up? And this is my last one. I'll let you chime in there, Strazza. But this is the last one.
I got something to say about these tech charts. Come on.
All right, hold on. Throw the S&P CRB there, Spencer. This is slide 10 on the deck.
I was going to ask you which slide. Thank you.
Yeah. By the way, my Ireland coffee mug is so awesome. I love Ireland so much. It's one of my favorite places.
My Japan coffee mug.
Oh, look at us! A couple of global traders here. No big deal. JC with Ireland. I like Japan better than Ireland. All respect to the Irish people. I love Ireland, but Japan takes the cake for me. Okay, stocks. So what's hilarious and classic is that the secular downtrend in commodities relative to stocks, that monster outperformance in stocks over commodities for so long, ended in 2020 with crude oil trading below zero.
Yeah.
I can't think of a bigger catalyst to change a long-term structural uptrend than crude oil trading $30 below zero. In other words, traders were paying other traders to take their oil. Usually you're selling oil to other traders. In this case, you're paying traders to take your oil. And this would be a perfectly logical place for stocks to roll over relative to commodities, and commodities resume the leadership that began 3 years ago. And we're seeing it. So
this is a great chart. And I think this chart, the most important takeaway is that it's a very good reminder of the fact that commodities, not stocks, have been the better place to be for several years already. So we're not.
Wow, you had quite the mean reversion over the last year.
Yeah.
Right? You did.
We're not betting on a primary trend reversal here. We're betting on more of what we've seen over the past few years.
We're betting on trend resuming.
Yes.
Yeah. That's what I see. And remember what's in the S&P? It's almost 30% tech. Yeah, when you add all those other mega cap growth, you're looking at half the index is mega cap growth. So it's really, and then you could kind of break it down into what's not, what's a lower weighting in the S&P 500, things like energy, materials, industrials. So it makes sense in this commodities. If this is a commodity super cycle, this is where it would resume.
If all these things you're saying are going to actually happen, you don't want to be in the indexes, right? You want to be picking stocks in these cyclical groups. I love all these ratio charts. I think 4 and 5 here, a little bit cute. A little bit early.
Hold on. Which ones are cute? Tell me which ones are cute.
XLE versus large cap growth, tech versus energy. I mean, listen, it's been a couple.
Are they cute? What's cute about them?
It's been a couple of weeks. Let's see.
A couple of months.
So this started in July.
This started in. Are we really going to do this? I'll do this. I'll play this game.
You're gonna cheat.
I'm not going to cheat. There's no cheating. I'm looking at a closing chart, and
It started in mid-July.
On July 18th, technology peaked relative to the S&P, but momentum had already been diverging, and you can argue that it was really the end of May.
Okay. What did
Nobody's
you say
cheating.
what did you say was your favorite or the best indicator?
Price.
Okay, so we'll measure from price. It's been a couple of weeks. Listen, hear me out. I think you're right. There's a lot here. There's a lot that we can look at, whether it's a chart of XLK or NASDAQ.
Sorry to interrupt, Strazza. When we're done with this fancy show that we do,
yeah.
Let's get with the team and let's start doing some breadth analysis there on technology stocks.
Yeah. I mean, we do it every week in the sector breadth charts.
I want to break it down, and I want to flip it on its head and look to see the drawdowns. Essentially, we'll schedule a meeting specifically for growth breadth.
Okay. Chart 2. Like I was saying, technology, large cap tech, XLK on an absolute basis, NASDAQ 100 on an absolute basis, running into very logical levels of resistance, right? JC's been very clear about this over the past week plus now. If you look at the relative trends, XLK SPY is what it is, but this one I think shows it a lot more clearly. This is equal weight technology versus the equal weight S&P 500. It hasn't been able to get through this level for 3 years now, right? So this is a shelf of former highs here acting as a very logical level of resistance, and you're seeing the pullback right off that level. I think the question just becomes, though, what is the nature of this corrective action? How long until the primary trend reasserts itself? If you go down to chart 3, this is just NASDAQ 100 futures. Why is this any different from February or whatever it is here, April, right? This is just another.
Because sentiment is very different than it was at the beginning of the year.
A better answer, I think, would be the kind of stocks that are working are not in the NASDAQ 100 right now.
Right? Well, because sentiment got a little, people were finally like, oh shit, maybe this crazy Cuban was right and this is a bull market. So and now the rug pull, right?
2 things. I'm not even convinced that the NASDAQ 100 does roll over here, right? I think we could be looking at this chart a week from now and saying, oh, look, RSI fell to where it did the last 2, corrective periods this year, and we're moving higher again.
That's right. But I think momentum's going to be, to your point, I think momentum's going to be a big indicator. That's going to be a big heads up as to how bad does it get.
That's why I included it for you here. Yeah. So then, even if that happens, though, and the NASDAQ 100 is correcting, in a way that is deeper than it was the last 2 times this year, there's still going to be plenty of stocks out there that are probably offering nice opportunities on the long side, I think. I don't think tech stocks or mega cap growth stocks cooling off necessarily means you don't want to keep looking for opportunities in energy, materials, industrials, financials, etc. Right? So I'm just reframing kind of what that world would look like.
Sure. Yeah. We're getting asked in the chat to talk my book. I got some energy. I got some healthcare, a little bit of small cap tech, and that's it. That's it. Keep it simple, stupid. One of the things that was really interesting that Mark Fisher mentioned in the podcast, again, you should go listen to the podcast. Listen to it twice, actually, because he's the freaking man. And he's abusing Josh and Batnick way worse than I abuse them, which is also funny. What Mark was talking about is Stephen Cohen's ability to just admit a bad trade and start from scratch, like what he's doing with the Mets. Like when whatever you're doing is not working, just pull the plug, just start all over. And Stephen Cohen's doing that with the Mets. It's really, really interesting. So if you find yourself in a position where things are just not working, start all over again. In my case, it wasn't really that. It was actually the opposite. Things were working the best that they've ever worked. And people kept telling me how smart I am and how great everything is. And I'm like, start lightening up. This was like maybe 3 weeks ago when I was still at the beach. Strazza was in Asia. I'm like, man, people are, I'm not that smart. People were giving me way too many compliments.
I can't wait to listen to the podcast now. We were talking about the Mets this weekend in Pennsylvania with your in-laws. But he also is not afraid to admit when he's wrong and be shameless about it. I don't know if you read the letter that he sent out, I think just a few days ago, but
To Mets fans or SAC people?
no, to Mets fans, to Mets season ticket holders.
I love how he writes letters like, well, this is what I do for the hedge fund, so I might as well, right?
Yeah, he used some strong language about like how disappointing it was. But
Because he's a Mets fan. Like, he wants them to win.
they're in good hands. They're in good hands. I know it's disappointing, but yeah.
But don't you want an owner that, I mean, I don't give a shit about the Mets. For all I care, the Mets could lose every game every season, and I'd be perfectly okay with that. But I appreciate someone like him who loves the Mets, his whole life loved the Mets. He bought the Mets. He wants them to win. Like, as opposed to an owner who just wants to like own a team because like it's cool to be a professional owner. You know what I mean? Like, this is not that situation.
Well, look at, I think, a perfect, and no offense to Chamath, but he's the opposite, right? That was an investment for him. Steve never looked at owning the Mets as an investment. If you ask Chamath about the Warriors, he's like, yeah, I 10x'd it. Of course I'm going to sell. You know what I mean?
Yeah.
Steve Cohen, this is just his passion. I mean, he's a hardcore Mets fan. He's been wanting this team for decades.
Yeah.
And he's finally got it. He's going to own it forever.
And the only reason I want to be a billionaire, I don't know if I'm ever going to get there, but the only reason that I would go for it and not call it quits at a few $100 million is to buy the Dolphins.
Yeah.
The only reason that I have any interest at all to be a multi-billionaire. That's the only reason. If it wasn't for, because if I'm a multi-billionaire, I could buy the Dolphins. If it wasn't for that, I would call it quits way sooner.
Yeah, absolutely. It's a good point. I don't think I would ever have a shot at the Giants because they're never selling. But I hear your point. Who owns the Dolphins now? Heisinger got rid of it a while ago. Who even
real
owns?
Estate guy?
It's Stephen Ross, who is the benefactor of the Michigan Business School as well.
Don't know him. You guys have been so irrelevant for so long. Nobody even knows like your front office, your owner. I don't even know who your coach is.
All right. Well, this year they're going to break literally every record in every offensive category in the history of the NFL. So
I'm excited for the game.
Get your popcorn.
We'll talk about football at recess. I got some.
It's going to be a track meet. Every game is going to be a track meet. All right. So Strazza not quite convinced that it's going to be a hard landing for technology stocks. For the record, I'm not convinced either. I really don't care. I don't have any exposure there. They can all go to zero. They can double. I'm good either way.
Hey, it's 8:50 in the morning. Can you not say things like hard landing? All right, we don't talk that way.
Oh, I thought that was a funny joke. You didn't like that one?
Fed jokes too early on a Monday. Fed jokes
too early on a Monday. Too soon. Too soon.
We need a button for that. Fed joke.
All right, I'll get on that. All right, should we move on though?
Yeah. Why don't you? So those are my thoughts on the state of the market. How did you feel about that, Spencer? Did it feel as good for you as it did for me?
No, I always enjoy listening to your state of the market. So I mean, that's why we start the show off with it because it's nice to, sometimes I can get tunnel vision on this big mover of the day. Stocks up 30%, down 20%, whatever. But like that doesn't really matter in the grand scheme of things. What matters is the overall look. So I enjoy it.
Strazza, you see this? Who's paying attention? Huh? Look at Spencer.
Gives me some much needed perspective here.
Look at
now,
that.
That being said, let's talk about some of these movers here. Where's the earnings calendar? Is it up?
Movers and shakers.
Are we not running bumpers anymore?
Oh, we can do that.
There's no
run the bumper.
No, there was an earning over the weekend.
Yeah, Berkshire.
Yeah, they're not on the calendar because they report on Saturdays.
Sell this stock, whoever it is. Who reported?
Berkshire Hathaway.
Berkshire Hathaway.
Oh, okay. They're the only one who's allowed to. This is what they do.
I know. This is what they do.
I had the busiest weekend of my life. I don't know what happened, but this is great. All right, so JC's going to short the hell out of this based on what he's been saying the past few days, right?
I'm not going to short it.
It looks the same as everything else you've been talking about shorting. Why not?
I'm not short anything. I don't have any shorts.
Selling Apple that looks like this, Microsoft, XLK.
First of all, I didn't own Apple anymore, and I didn't have any Microsoft either.
Spencer,
I'm not short tech.
Am I crazy? Have I been hearing things, or does this chart look exactly like the ones he's been Not
Short
like-
it. Knock yourself out. I'm not. I don't have any short exposure for the record.
There's a difference between he's said bearish things, but
I heard the word short and Apple in the same sentence on Thursday.
well, he's been saying bearish things. I don't know if
Yeah,
he's been
honestly,
doing. I don't know if he's doing bearish things.
I
but
wish
he's
I did short it. Gun to
saying
my
bearish
head.
things.
Like when we talk about these charts, it's like, oh, what would you do here? What would you do here? I would short it. Doesn't mean that I'm actually going to go do that. Like sometimes I do, sometimes I don't. I was playing golf with you in the back half of last week. I wasn't getting short.
Hey,
Maybe I'll get more short this week. I don't know. I got no short exposure.
Yeah, you're fine. Hey, great idea, Rachel. We should get Quarter to sponsor us. I have a list of desired
Quarter.
sponsors
What is that?
and Quarters on. I've told you a million times what Quarter is.
Is it like the pants, like the golf pants?
Not even close. No, it's earnings summary. Basically, it's a good app.
It's a great earnings app.
Yeah.
It gives you summaries, and you can listen to the calls right on there. You can pull up the PDFs of the transcripts and the reports themselves. It's great.
So it's not that the pants that you want me to buy?
If you are ever going to follow earnings in any way, you need this app. It's great. Everyone should be using it.
What are the chances I go download this app, you think?
Zero.
It's not for, just like you would say to me, you're not the audience, my friend.
Anyway, Berkshire Hathaway's performance obviously is tied to the performance of the market in a lot of ways. So they had a great quarter. They have $150 billion in cash, basically, and they're profitable. And
How much cash? Do they have more than Apple?
Do they have more than? Oh wait, what was the number? It was $147 billion in cash.
They have the same amount of cash as Apple. These two companies together have $300 billion in cash. It's a mega cap cash stock.
Yeah,
between these two companies.
Think about how much cash, like what their cash alone would be like one of the biggest companies in the world.
Dude, exactly. Yeah. It's so much money. They can do anything. They can go into any business they want. Berkshire Hathaway can go, buy another large cap tech company tomorrow. Not that they ever would, but
it does appear that they lowered their stake in Chevron. Although I guess we'll wait a week or so to find out about that, because when they file their 13F in a few days. But it appears that they lowered the stake in Chevron last quarter.
Really? I would be surprised to hear that. Lowering their stake in Chevron while increasing it in Occidental.
Yes. Yeah, they talked a lot. I skimmed through the actual report.
Because Uncle Warren be looking for that beta, son.
But wait, we did this last quarter, and then I quit after a half hour of looking into it. Do they even report the holdings in the quarterly reports, or is all that just in the Fs? I don't know. I know that they used to, and they would give you a market value of each portfolio.
They will. So it's kind of buried. They'll give the market value of, the stocks that they own, right? I can see
equity investments,
right? Exactly, the equity. I can see right here. American 75% of the aggregate fair value was concentrated in 5 companies, and then it lists them. And then American Express, $22.4 billion, Apple, $119 billion, Bank of America, $34 billion, Coke, $25 billion, Chevron, $30 billion. But it doesn't that's all you're going to get, really. So it doesn't break them down by
how much of Apple do they own right now? How many?
$119 billion.
I thought they had more.
That's the fair value. Actually, it might be more, but
119 sounds right. What is that? 119, and it's a 750 billion market cap.
Check
my math. That's 13% of the business.
Apple's market cap is 2.8 trillion.
I'm sorry. I was reading for the wrong period. Reading for the wrong period. It's actually it was 119. Now it's 177.
Oh wow.
Yeah.
And their market cap is what? 750.
It was 119. It was 119 at the end of the year, and now it's 177. So nice. JC, wait, what was your question? Sorry.
What's Berkshire's market cap? Berkshire's market cap is
6%.
60.
6%. 6.2%. Berkshire's market cap.
What?
Why would you be calculating out of Berkshire's market cap?
Because I want to know what percentage of Berkshire's Apple.
That doesn't tell you what percentage of Berkshire's Apple.
If they own $170 billion of Apple and Berkshire's market cap is $770 billion, then you can calculate what percentage of Berkshire's Apple. Am I wrong?
I mean, I guess, but that doesn't tell you like what percentage of their company value is in Apple stock. They also have liabilities, right?
Oh, I see what you're. Got it. So I see what you're saying. So it's not just assets.
Yep.
Yeah. How?
I mean, like you could do like that could tell you something, but you're not calculating anything.
They have as much cash on the books as they do shares in Apple.
That's crazy.
Yeah, more or less.
Double their stake in Apple with their current.
According to Kathy Wood, Apple is a cash alternative.
But anyway, what I was calculating was how much of Apple stock that would represent just based on the market value they gave me. 6.2%. That sounds about right. That's what they have.
And that's not what they purchased. They've purchased like 3%, but it's gone up just due to the buybacks, right? Yeah. Okay.
Oh, wait, hold on. I have something to say about that and the buybacks.
Can we save it? Can we bring in Larry McDonald?
Yeah, Larry's here.
It's Larry's here. Bring him in.
Yeah. We got Larry here. Larry McDonald, Bear Traps Report. Great follow on Twitter. Let's get him on the show right now, and then we can go back to this conversation.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Larry.
Hey guys, I love the studio. Nice work.
Not bad, not bad. Larry the legend in the house, folks. Larry McDonald, author of the Colossal Failure of Common Sense. First of all, great title for a book. My suspicion is you didn't come up with that. Do I have that right?
I did not.
Great title for a book, Colossal Failure of Common Sense. It's a if you're interested in what the hell happened in 2008, particularly at Lehman Brothers, it's a great book about the disaster that was Lehman at the end anyway, written by a bond trader at Lehman Brothers, and that bond trader just happens to be my good friend, Larry McDonald. How'd I do? Not bad, right? It's good, right?
As a former Lehman trader, I tell my wife once a month, if we sell 1 million books, we'll break even on our Lehman stock.
You need new material, Larry. I've heard that joke 6 times.
I know.
First time I heard it, I liked it.
It is funny though. It's funny because it's true, right? You know,
Yes,
right? And your wife is lovely, by the way. How's she doing? How's the family?
Good. We just did a little wine tour through Sardinia, and
who's fancy?
I can tell you that it's Sardinia makes Nantucket look like a flea market, I think.
Wow, that's aggressive. I like it though. I like it. I have never been to Sardinia, but I mean that part of the world is very special to me. So I've been all over Sardinia. I haven't actually you take a ferry in or you fly in?
Oh, we flew in. Yeah, we flew in. But yeah, it's a long ferry ride. It's like Capri is great because it's like a very short hour ferry from the coast. But then if you try to do Sardinia, it'd be 6, 7, 8 hours. So
yeah, fly like a yeah. Are you still in Panama or are you in the States?
I'm in Panama this week and then back in New York next week.
Let me know next time you're in New York. Go get some steaks.
Okay.
All right.
Okay.
Okay. Let's get right into it. I've got bond questions.
Yeah.
When I have bond questions, Larry, I call you. You know this. I've been doing this for years and years and years. Where are rates going? Can we talk about the 10s? And we don't need to get fancy with spreads or anything like that yet. Can we just talk about 10s? Like, are we going towards 5? Are we going higher? Do we buy commodities? Is that what's going on?
Well, the answer is, I think a blow off top, yes, near term. But we just did 2 weeks in a week and a half in London, and we had our conference with our institutional investors, and we met with all the big funds, right? And so I asked a lot of the guys that we were in the rooms and the questions, and I asked that question to a lot of the best fixed income managers that are struggling with this. And the one thing that people are saying is that the way the Democrats did, as a Republican, I tell you, the Democrats did a brilliant move here, because in 2011-12, the Republicans tried to create the sequester and impact the 2012 election through austerity, the Tea Party, the whole thing. This time around, and that was Obama, Biden. This time around, the Democrats knew this. They said they're thinking to themselves over the last 2 years, if the Republicans take the House, we're not going to let them do that again. So what they've done, JC, is fiscal spending is up with unemployment this low, right? Full employment, ho, 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 ha, ha, economy strong, soft landing. We are doing a 10% fiscal deficit spending is up year over year. And so what they've done is they're trying to slow walk the fiscal into the economy to get us through the 2024 election. And what it's causing is it's forcing bond yields to go up, because a soft landing with this kind of fiscal just creates more pressure on commodities, all kinds of things, on employment, as you saw this week with average hourly earnings on Friday. And so the whole thing is they're not really allowing the business cycle to function. They're juicing it, and they're trying to push any kind of weakness past the 24 election. That gets you higher bond yields, higher commodity prices, and move from growth back to value.
So then just to think about that in the opposite way, if and when the election's over and the fiscal stimulus goes away, then that would suggest lower bond yields or less upward pressure on yields.
Yes. Yeah. And JC and I looked at the last time I was on with JC, we looked at a chart, and the chart was like,
I can't believe it. You and me were looking at a chart.
Looking at a chart. But this was a really cool chart because it was a chart of control of the Congress relative to bonds. And what Steve's getting at is spot on, where what happens is when you go from one party control of the House and Senate, that typically gets you higher bond yields, right? And then when you go to two-party control, when the House, typically when that austerity kicks in, which in this case is going to take a little while because the Democrats have basically passed the stimulus. Normally by now the Republicans would be able to influence spending, but so much of this spending. So we did $3 trillion of deficits in 2022, just under 3 trillion in 22, and in 21 we did like close to 1.5. So it's 4.5 trillion in 22 and 22 and 23 essentially. And so that is going to be take a good year for the Republicans to really rein in the spending, and it's all going to come, JC. It's all going to come down to September 30th, and that's when you have the budget showdown, and that's why I think vol is starting to pick up here, because by September 30th, Republicans shut down the Congress, and then they try to inflict that some austerity pain into the situation.
Usually when I have Larry McDonald on my podcast or show or anything, I give him in Spanish we say leer la cartilla, which means like give you like the rules, like, you know, when you're gonna go to like a family friend's house, like your mom tells you how you need to behave, you know, say please and thank you, you know, don't just randomly ask for things, you know, in Spanish, leer la cartilla. Usually with Larry, I'm like, Larry, I want you to come on, talk markets. I don't want to hear about your economics or politics. Let's get right into it. We forgot to do that this time. Right? We forgot to do that this time. So, Larry, what commodities are we buying?
Well, uranium, number one.
I was going to ask about
I love that you started with uranium. Such a Larry McDonald answer right there.
Larry,
who says that? When you talk about commodities, very few people are just going to like start with uranium. I love that. I don't disagree. I'm with you, by the way.
Larry is one of the best follows on Twitter, always updating on the news in the uranium industry. So I know you've been a bull for a while. What's going on? Everybody,
what's the vehicle? CCJ.
Everybody's bringing
CCJ. Yeah, so right now CCJ is trading at the richest point to the URN. So the junior miners, the URNM, and then the URNJ. I think right now.
What, are you talking about uranium junior miners?
Yes.
Those guys. That's some junky shit, Larry. I like it. I like it.
Wow, I didn't know this ETF existed. There's a junior uranium miner ETF.
That's aggressive. I like it, Larry. Good on you. Good on you.
And JC, you and I have been talking about this for years. At the first stage of a bull market, people run into this, what's called the safer plays. First stage of a gold bull market, people buy gold. By the middle, second, third, fourth inning, they're buying the junior miners. So we're at a stage now with the uranium where we have like a 1-2 year bull market, and the next stage will probably be junior. So I think you want to own the juniors, URNJ versus CCJ right now. CCJ is like your largest market cap company in the industry.
If you want the juice, or listen, if you want the juice, you could be in the little ones, or you could, if you want the juice, you could be in the derivatives of the big one.
Yeah.
Like you could be in the offshore drillers, or you could be in ExxonMobil or Chevron, or you could be in Exxon or Chevron calls if you want that juice. Is it kind of the same?
That's a great way to simplify it.
Here's the problem that I always have with these commodity stocks. They often will have very company specific things going on. whether it's a new project or a big debt load, whatever it might be, right? So you can mess up in a way and choose the wrong vehicle if you're just buying, one of these junior miners like the individual stock itself. Is CCJ big enough that it's really safe that you can almost use it as like a diversified vehicle to play a bull market in nuclear or uranium? Or do you think it would be better to go with one of the funds?
It's the bellwether.
I think net, it's based on your risk tolerance, but it's a great question, Steve, because CCJ did this acquisition of, say, Westinghouse about a year and a half ago.
Right.
This was such a classic thing where to me, it was a really good acquisition, but a lot of the hot money people in the stock puked it out. It dropped like 15% in 2-3 days, maybe 20. It was crazy.
Right.
And so even though it's the biggest market cap stock in the whole uranium sector, it's relative to the market has a much higher risk beta. And so you still have to be careful with uranium stocks, but what I love about the uranium sector is the entire market cap of the sector is like 35, maybe it's a little higher, maybe 36 billion. And I think Elon Musk has a backroom
zero, right? Right,
Well,
Larry? 36 billion and zero might as well be the same thing. 36 billion is a drop in the bucket.
That would be in our 100 club, JC.
Yeah. I was gonna say Elon Musk has bathrooms bigger than that. I mean, it's just the whole world's mispriced because everybody's running into these green trades, and they're not thinking about the infrastructure needed to support the green trades over the next 20 years. And
so what is the elevator pitch bull market thesis for uranium right now?
Well, the elevator pitch is you've got a suppression of supply because you've got a 10-year bear market, 10-year bear market where CFOs that made bad investments and all the brain drain from the industries come out. Demand in terms of the world, whether it be the Fukushima nightmare is long.
By the way,
past.
I was long for that, Larry. I got smoked, bro.
Oh,
smoked.
I think I was well. I was trading it through that period. But the bottom line is countries around the world are capitulating where they had been negative on uranium and nuclear power, and now they're going all in. So this is the key to our next book, and we have a whole chapter on this. We have a book coming out with Penguin in January, and the whole crux of it is that you've just got a massive amount in order to get to net zero 2050. There's a billion people in India that don't have air conditioning. And so we're increasing the standard of living in countries around the world. We're decimating the Rust Belt in the United States. But the good news is we're increasing the standard of living. So we're increasing demand for energy. And the only way to get to carbon neutral, which is going to take a longer term, is through the nuclear renaissance. And that's what's happening.
Larry, listen, we can sit here talking about uranium all day.
Yeah,
but we got to hop in a couple of minutes. Outside of uranium, where are you going? Oil and gas or ags?
Oil and gas. I think I'm leaning more away from right now. The premium of say the OIH trading at a massive premium to oil itself. I think oil right now is very cheap to the OIH. So maybe just through the commodity itself is pretty cheap relative to. So a lot of money's flown into.
What about all this wheat, sugar, cocoa, corn?
Needs to do more work there. Look at Mosaic again, but needs to do more work there. That requires a little bit of a more deeper dive. But silver miners, silver right now, you got the whole green renaissance once again, demand for silver, industrial metal is sort of cheap. The silver ratio to gold is now breaking out. And historically, once you get below this like 84, 85 level, you get all of a sudden the ratio really belongs back in the 70s or 60s in a bull market. So I think the top idea would be silver, Hecla Mining, HL, SILJ with junior miners as well.
Silver outperforming gold's a little aggressive.
Well, it's starting to. In other words, if you look
over
at
the last year, you've seen it.
Yeah, especially the last couple months. So when you break this trend of that silver gold cross, typically when you break these levels right in here, that's when you get an acceleration of silver versus gold. I think, and typically whenever you're near the end of the Fed rate hiking cycle, whenever you get to that end, silver starts to outperform gold too.
Because it seems by my work that the gold precious metals market is less interested in what the dollar's doing and more interested on real rates.
Yeah.
And the fact that real rates remain elevated has put a lot of pressure on those precious metals, right? It's not about the dollar, it seems like.
No,
Right?
it's not about it's if you can get 5% risk free, there's less of a need to own gold. But once the market gets the sniffer, that front end's going to come down, and that's when whenever you get to the end of the hiking cycle, that typically means you're within 1 or 2, maybe 3 years from rate cuts. It could be shorter. And whenever you're at the end of the hiking cycle, that's when money starts really moving into silver and gold, but more so silver.
All right, one stock, Larry. One stock for now for the end of the year. You got
And then
one
I
stock.
got,
What
I
are we
got
buying?
one more, Spencer.
What are we buying?
One stock for the end of the year. I'd say Southwest Energy, SWN, in the natural gas space.
Wow, I like it, Larry. Larry, great guess. We got to get Larry on here more often. This is fantastic. I can do this all night.
You know, I
Can
want.
we do this all night? By the way, can we meet for steaks? We go to Strazza. You can come too. This place, the steakhouse in the village.
Remember that show, the Bulls and Bears? They would do it right there in the steak place.
Do they still do that? No.
No, that was like 3 or 4 years.
That was at the Waldorf. That's no good.
Yeah, that was at the Waldorf.
That was at the Waldorf. No. This is that strip house in the village. They put the foie gras on top of the ribeye. Woo!
You know, we have to have Larry back soon because we didn't even get a chance to talk about the BOJ and the yield curve control and everything going on over.
Why don't you save that for a day I'm not around? You can talk about the BOJ too.
All right. We'll do
All right.
Thanks,
All right.
guys.
Larry, thanks a lot, man.
Thanks, Steve. Thanks, JC.
All right.
Thanks, Larry. Adios.
All right. That was good stuff.
was
Yeah,
fun.
we as usual with us, we don't cover nearly half as what we want to, so we'll have to get him back and talk about
Larry's
the
the
rest
man. Are you kidding me?
You just ask him to pick stocks. He wants to talk about the BOJ and
I know. Oh, I know. I know what he wants to talk about. That's why I'm preventing him from talking about those things.
All right. All right. It's 9:17. Let's see what Kimmy's watching today.
Let's do it. I'm gonna get some coffee.
I have an idea.
Hey guys,
Hey, what's up?
what's going on?
Nothing. How's Liberty?
Doing better, thank you.
She's
Thank
doing
God.
better. Good. I was thinking about you and her this weekend.
Aw, yeah, my little girl. She's trying.
She's not little
strong.
anymore. Well, first of all, she was never little, to be clear.
No, I know.
she's
85
big.
pound bug. Now
Does
she's
she
like
weigh more
74.
than you? I think she might weigh more than you.
Okay, then. Kimmy, what are you watching today?
What am I watching today? I'm watching Net. I'm going to see if it stays below a certain level today, see if it pushes lower. I think it got downgraded and it was earnings, I think, on Thursday or Friday. I am watching PayPal.
Hold on, Kimmy. Before you keep going, I want to talk about this Cloudflare. You're looking for a short. Monster move on Friday up 7%. Fading that move or looking to fade it. I like it. Got downgraded this morning. Down almost 3% in the pre-market. Sitting right around 67, 64. Can we walk through this trade? Because I like this. I like this short.
Yeah, so it would just be for a quick short. It's got to stay below like 68.20 or so. I gotta see where it opens. It could just drop quick and then the trade's done. So, I can't tell where they're going to open it. The first minute of trading, sometimes you get a spike up and down, so it makes it difficult to get in, and you don't want to get trapped. So I'm going to wait and see, and it might be able to take the trade or not.
How much of a drop are you looking? Just to fill Friday's gap or more?
Well, there's one at 66.82. I'd love to see the other gap at 65.56.
Is it un-American to short stocks, Kimmy? Or is it the most American thing you can do?
It's the most American thing.
Kimmy, I want to ask you because you have active longs and open longs and open shorts that are not day trades, right?
Correct. I mean, I keep stuff on. I add to positions.
Right.
Like TLT last week, I bought it like 97.10. I said, what? I was able to get out at break even. I didn't. And I said, guys in the room, I said, this name has potential to gap down. It did gap down. I did add to position. So I added to it and I made money into the gap at 96.40. But at the same time, I should have been more cognizant and just been like, it could gap down, should not take in trade. I did make money in it. It wasn't a great trade, but I let the room know I'm adding to it and going to sell at a certain level.
I wanted to ask you on like a Netflix, for example, which you have an open short in Netflix. Are you do you have like an open order out there, like a stop loss, or no, or how are you monitoring that?
I monitor it to see how much money, I always think in my head, like how much money I'm willing to lose on the pops in those names. So, I've worked with portfolio managers for many years. So sometimes I stay in positions and add to positions like I did with Hess, right? So that makes it difficult. And I say to people, you need to stop out, you stop out. Now, last week, I recommended Netflix as a long to the room, but I'm shorted, so I'm not taking it. I said, this name breaks 440, target 445, and it went there. What day was it? August 1st. So I gave the room a long in Netflix on August 1st at 440. When it hit 440 for a move to 445. So, and a few people in the room took the trade. Some of them only took a few points or 3 points, but we'll see how they do. Moderna is gapping down. I have that on my list. We'll see if it bounces or not. I'm not sure why it's gapping down.
There's more sellers than buyers at these prices, Kimmy.
What?
There's more sellers than buyers at these prices.
Yeah. I mean, I couldn't see if it was downgraded or what's going on with it. I was trying to look.
I think Moderna is trading down with buy on. Oh, a few downgrades this morning. They had earnings on Thursday, but a few downgrades this morning.
Moderna?
Yeah, Moderna last Thursday.
No, Moderna had earnings last week.
Yeah, right. Yeah, last Thursday.
Right.
It could be trading down with BioNTech this morning because they reported it as well. It probably is actually. So
right.
That could do it. All right, guys, if you want to trade with Kimmy and not just talk about her trades the day after like we do here, actually be in there with her and follow her trades and get them as she's doing them, you can only do it in her room. The way to get access to her room, it's very simple. You can actually, you can either click on the link in the chat that I just dropped in there. You can click on the link in the description, or you can scan the QR code on the screen right now. Those are the ways to get into her room. She's there every single day, dropping trade ideas and picking winners. Kimmy.
All right, guys. Thank you so much. Have a good day.
All righty.
Thanks, Kimmy.
See you soon.
And couple of great points that I want to make here. Number one, she's shorting technology, software specifically. So she's looking to do similar things that I'm looking to do. Also,
so you are short technology.
I am not shorting technology, but I'm interested in shorting technology. I am not short. When I'm short, you will know. You'll be the first one to know. I might even be on the phone with you as I'm entering the order. Also, I want to point out she's talking about multiple time frames. And we talk a lot about multiple time frames by looking at monthly candles and weekly candles, and then we break it down to daily charts. She's talking about a longer-term trade that she's had on a Netflix and then a shorter-term short against that longer-term position. So, guys, just reiterate that the market is fractal. When we talk about multiple time frames, it could be weeklies and monthlies and dailies. It could be, 10-minute charts, 30-minute charts, and daily charts. Everything is fractal. So regardless of your time horizon, incorporating multiple time frames is a huge advantage. Those fundamental people, they don't have that advantage. They are at a disadvantage.
Okay, I know there are a few tickers in the chat. We have charts for that. We'll save them for later. But let's go back to the conversation we were having before about, I guess it was Berkshire, and funds put together this chart that I want to bring up on the screen, which is Berkshire and the S&P. I wanted to show that because I thought it was a very pretty chart. So, nice job,
yes.
funds.
So, for those of you who are unaware, Berkshire Hathaway is what we like to call a bellwether, particularly for the market. Berkshire Hathaway, very diversified. You got a lot of industrials in there. It's the largest component of the U.S. Financials Index. It's a very important stock. I would put very few stocks more important to this market than Berkshire. You can even make an argument that Berkshire is the most important company. What's more important than Berkshire, Strazza?
Apple and Microsoft?
You could argue there's lots of companies more important. You could argue
think that Berkshire is more diversified than just mega cap tech. It's got Apple in it. No?
It kind of looks like Apple, and for a good reason. I think you're right because it's a fund, right? So it's almost like its own little index with a lot of Apple. So it's built just like all the other indexes. It's not a stock. You know what I mean? It's not fair.
It's not. It's an index, right? I treat it like an index.
I would agree with you. If you had to pick one stock for the index, yeah.
It's an index that I love to sell naked puts on when everyone's all crazy and bearish and gloom and doom. That's when you sell naked puts on Berkshire, hoping that Uncle Warren doesn't pass overnight, because that would be a bummer.
But now you're buying puts at the old highs.
I am not doing anything with Berkshire Hathaway right now. As a matter of fact,
I'm kidding. All right, what's next?
All right, real fast. Tyson Foods getting the beats this morning on their report. Let's see. EPS missed, sales missed, and we're down 10%, give or take.
What is this Sovos brands?
Yeah, I was going to bring that up in a second too, but we can go there now if you'd like.
did you know that Tyson was based in Arkansas? Who knew?
Yeah, I'm not buying.
Actually, I think I did know
Not
that.
buying Staples. I'm not interested in.
They got publicly traded stocks based in Arkansas.
Yeah, Walmart.
I mean,
and the Bank of the Ozarks.
Right. No, Sovos is SOVO is the ticker. They're getting acquired. They're getting bought out by Campbell's Soup.
SOVO.
Yeah, $23 is the price. It's the cash deal. So
Wow.
$23 is your bogey, and that's that. That's all there is to say about that. Really,
And
there's
these
not.
food companies, man, they keep popping up on scans. Clearly, I mean, they're getting acquired. M&A. Man, it's good business.
all right. So I've never heard of any of this. Oh, JC, this is your.
Wait, do you want to? Are you want to look at the brands? Is that what you're doing?
JC, this is his favorite pasta sauce.
Oh, here. Well, I'll show it on the screen.
What's my favorite pasta sauce? Rayo's?
Yeah,
Yeah.
That's what Campbell just bought, among other things. That's one of their brands. Yeah.
Here.
I've never heard of any of the other ones outside of Rayo's. But
Rayo's, Noosa, Angelo. I don't know this stuff either. I've never heard of this.
Roman program sauce, JC. Explain why.
Roman program sauce. Yeah, very low sugar for sure. Yup, the marinara and the vodka, very low sugar. By the way, for the record, Rayo's in Harlem, not overrated. Not overrated at all. Might even be underrated. Might even be underrated.
Just to be clear, talking about a completely different thing now.
I am not. What do you mean?
What?
You're talking about a restaurant.
A restaurant? Where do you think the sauce comes from?
No, it's different.
No. This is a brand within a. This is a brand within a brand.
I don't know, like if you guys are like been living under a rock, but Rayo's sauce is.
Okay, I don't know. I have no idea. I'll be honest.
Yes, it is comes from the people that own the restaurant. Yes.
Fine. Okay, maybe you're right.
And my point, maybe I'm right. I'm definitely right. Because I've spoken to the owners about how the sauce business is going and some of the other stuff that they're doing as well, for the record, recently, actually. And the bottom line is, if you get an invite to Rayo's, because you can't just call up and make a reservation, you have to get somebody to invite you. Go hungry, and don't make plans because you're going to be there for 3.5 hours eating and drinking. It's fantastic.
Yeah, I just checked the website. Looks like he's right, Spencer.
Okay, fair enough. Wait, hold on. Wait, the other big mover. Right. The other big mover of the day is Sage Therapeutics. Holy cow!
This is what happens.
Yes,
this is what happens when you buy biotech stocks. Okay.
Yes. I wanted to show this pre-market chart. The lesson
Your charts
here
are so ugly, Spencer.
I wanted to show the pre-market chart.
Why are there colors on the chart like blue and yellow?
Because it's pre-market, man.
Okay. All
right.
Spencer, seriously, this chart it hurts my eyes. This is unacceptable. Are you kidding me? This is the morning show. What is this bullshit?
What's wrong with the chart?
What's wrong with the chart? How much time you got?
Alfonso, hook him up with the right format.
I wanted to show the pre-market chart, the pre-market data. I wanted to show that it's down.
This thing is cut in half, dude.
Yeah, 49% this morning. And the takeaway here is, if you are investing in pharmaceuticals or biotechs, you really got to know what's what, because I saw a ton of headlines all weekend, positive headlines about this company, because the news came out on I think on Friday or over the weekend. They got FDA approval for this drug to treat postpartum depression. That's good news. So why is the stock cut in half today? Because they did not get approval for this to use this drug to treat regular depression, just postpartum depression. So obviously it's a much larger market if you're treating for all depression, and a much smaller market if you're treating it for just postpartum, just one kind of depression. So that's why the stock is down by half today. And these are things you got to know if you are investing in pharmaceuticals or biotechs. Is positive headline doesn't mean anything really.
I gotta tell you guys something, and I don't want you to take
this chart.
I don't want you to take it the wrong way, but I love when this happens. I love when these little biotech companies get destroyed. And I'm going to tell you why. Because it reiterates to me, personally, selfishly, why I don't buy these things. So it's just kind of like, good job, JC. This lesson that you learned 20 years ago, good lesson. Because I've blown up in things like uranium and other things over the years. I've never blown up in biotech because I learned that lesson, by watching other people blowing up early in my career. And for those of you who haven't blown up in a biotech company, just take my word for it. Just stay away. Like bigger biotechs and bigger drug companies, they're more diversified. But like these one drug things, like you're begging for one of these scenarios. Just so I do love this.
Yeah, you're 100% right. Throw up chart one. I think I was saying like Uber the other day is an example of like investing can be easy. This is an example of investing can be hard. This was a large cap, more or less. It's a $10 billion stock just, 3 or 4 years ago, late 2019. Today, it's fallen below 1 billion. So I literally chopped in half from 2 billion to 1 billion cap today. New lows. This is what happens. And like you said, Spencer, this is a company that is getting drugs approved.
Yes.
How about the ones that aren't getting drugs approved? So
no kidding.
Tough game to play in biotech here.
Listen, if you own this stock, you deserve this. There's no reason to own the stock. It's long-term down.
But hey, I mean, good news for society. Can we just comment on the good news for society that we have a drug, the first drug ever approved to treat postpartum depression? There has never been a drug approved to treat that before. So that's exciting.
I'm sure and they just didn't prove it. So this is why we love Baker Bros so much. Not just because they're so good, but they're so good at a space that is so hard. I don't just love that their track record is awesome, but like they're in the right biotech stocks. And frankly, I'm not a scientist and will never understand half of these things that's going on with these companies. So for me, it's a pretty good option to follow them in this space. You ever read like a press release about like a drug approval?
Yeah, they're very often misleading.
But like at 2 o'clock in the morning.
But they're also just like, they use words that you don't know half of them.
Early in my career, I would watch these guys. They would have all of their clients, all their own personal money into these little tiny biotech stocks, and the announcements coming up at 2 or 3 in the morning on a Tuesday, and they would stay up all night drinking and doing drugs, not sleeping at all, because it's either going to be a celebration or they're completely broke. And they would go into the night doing all kinds of stuff. And I would watch this as like a 22-year-old, 23-year-old who didn't do drugs. I still have never done any drugs, but I was watching this happen. And sometimes it would work out. And I would be like, man, maybe I should start dabbling in these little biotechs. And then they would blow themselves up. And I'm like, oh, yeah, that's why I don't do that. And like, that's real life, guys. It's real life. Can we do a little chart report?
No, before we do, well, yes, but before we do that, I just want to bring up this hilarious comment from Bob.
Yes, please bring that up.
Bob P. JC, there's no chemistry on this show, man. We're doing something wrong. Okay.
You must be new here.
JC has no filter. Well, this we knew, and I look miserable.
Save this.
If you think he looks miserable now, I'm being nice to him today.
Add this to the testimonials file, please. Yes. If anybody else wants to say something so nice, we would love
this
that.
Bob P guy must be new here because I don't know if you heard, but we have been crushing it over the last decade. We are probably producing some of the most widely followed research in the history of the market. So we're doing something right.
And shout out Joshua Gomez. This guy gets it. Everything he says is true. So.
Shout out. I don't know what Josh said, but shout out to Josh. There he is.
Joshua Gomez, Strazza with the haircut.
Strazza's haircut. All right, hot corner. We had some good ones today.
All right.
Hot corner. So hot right now.
All right, what do we got?
Keurig Dr. Pepper headlining today. I don't know why we're talking about so many staple stocks on here. I know we just had Tyson Foods up. Look, they all look the same with these nasty distribution patterns. Do we have the chart? I'm looking at the table. Throw up KDP. I know it's in there somewhere. So the chief R&D officer, you could draw this in a couple different ways, right? It came here in just a little classic retest at those prior cycle highs before the COVID sell-off. You could also draw like a little horizontal line at the pivot lows from 2021 and 2022. And that could be like, where you would find confirmation for this little failed breakdown here, right? So this is one of those classic not tops, it looks like, which makes sense because in bull markets, the worst stocks play catch up to the best stocks. So we don't want to look at a lot of these bearish patterns and bet on breakdowns. That's probably the less likely outcome in this kind of a tape. So Keurig Dr. Pepper, you could probably get long here. There's, like I said, a couple places to define your risk. But again, I know I've been saying it, these are not the kinds of stocks I want to be in at this stage of a bull market.
Can we talk about how this is the chief R&D officer? Okay. I didn't even know there was such a thing.
I mean, he gets paid well for an R&D person, huh?
Well, someone's going to come up with new flavors.
Yeah, that's true. That's true. You're right.
I just had never heard of chief R&D officer.
Well, think about what Spencer just said. Like, this is product development. He's out there testing different, flavors of Dr. Pepper and stuff. That's cool. It's probably a cool job.
And he must have discovered something nice because he just dropped what? He just dropped a cool almost 2 milli on this.
I
don't think he's doing that because he thinks the stock goes down.
I was talking to someone who works closely with Pepsi as like a video consultant yesterday, and the stuff she was telling me that they do like internally as a company, super cool, really cool stuff. But
how about Vera Mobility?
Yeah, you want to talk about more?
We
had again that theme of regional banks, popping up with Form 4 filings continued. So this is Texas Capital Bank Shares, TCBI.
Hold on.
Yeah.
Vera, VRRM.
What about it? Nice trend.
I was gonna say, look at that. What do you mean? What about it? You need me to tell you what JC likes about this chart? I mean, big base, breakout.
We've been long this one. This is not the first time it's appeared on here, right? This is just an updated, revised 13G filing. So they moved their ownership stake from 4 to 5.3%. But look, I'll tell you a secret about one like this. If you throw up the table. So they moved from 4% to 5.3%. They filed a 13G already when they owned 4%. What did that tell me? That they're going to own 5% soon. Otherwise, they wouldn't be filing, right? So you get little
they don't have to file at 4%.
You get little pieces of information like that where I'll see this hit the wire and say, why would they fire at 4%? Oh, because somebody told the accountant that they're eventually going to go to 10%. And he's like, let's just file it now with the compliance officer, right?
Look at that. Somebody's stinking around here. That was good. You're right.
I've done these things. So
yeah. Because they're like, let's just get the ball rolling already, right? Is it like that?
Yeah, and the Intel CEO wants to lose more money. So
hold on. Get back to your Texas bank, your Texas regional bank.
Mm-hmm. This ugly chart.
Who's this guy, Robert Stallings? Who is this guy?
He's a bank CEO. He's probably
he's the CEO,
right?
I don't know.
See. Robert Stallings. I've seen him on this list before.
Robert Stallings is not the CEO.
Director.
Robert Stallings he's not even
chairman
in his
board.
He's the chairman?
Yeah. Yep, chairman of the board, blah, blah, blah.
So Texas Bank. But yes, to Strazza's point, we're seeing a lot of these insider purchases in regional banks. This is just another example.
Yep.
I like it.
All right, guys, the Hot Corner is a free daily note, tracks all the biggest transactions from Washington to Wall Street to the boardrooms. If you want to get this daily note in your email every single day, email us. Please just put Hot Corner in the subject line so I know what you're talking about. Questions at stockmarketmedia.com. And again, if you also want that RSI article that JC had mentioned earlier, email us and I'll send that over to you as well. Same email. Okay. What else did I want to talk about? There's a few things on my list. Oh, we can do chart report. We can also look at speaking of filings, guys.
I think JC's mic is off today.
Is my mic off?
About it. Yeah, your mic sounded funky coming in this morning.
I don't know.
Sorry, it was in the chat.
I was going to say, filings, we're coming into 13F season now. The deadline to file a 13F is the 15th, which is, what's that, next Monday? Next Tuesday. So we're getting a few trickling in. We had a 13F on Friday from Alphabet, which I normally wouldn't look at, but you know what they did last quarter, Steve? They sold 90% of their stake in Robinhood.
Really?
Yeah. They
how much Robinhood could they possibly have owned?
They Alphabet had past tense about 5 million shares of Robinhood and they have 600,000 shares.
Say it again.
They went from 5 million shares to 600,000 shares.
Yeah, but they
They
didn't
have
own
a
any
$5 million
Robinhood.
stake.
Robinhood's a $10 billion company. I mean, whatever they owned was so irrelevant to them.
I just thought it was interesting.
Eh.
And they had this thing from pre-IPO too. So anyway,
They're like, why do we own this piece of crap? Let's get out of this. And that's what happened. That's what happened.
Yeah.
I mean, it was 5%, right?
If you think it was anything more than, in a meeting, they're looking at their balance sheet. They're like, why do we still own this crap?
I'm sorry. I misspoke. It was 0.5%.
Okay. Well,
there's nothing.
0.5%. Yeah.
Well,
right.
They're just cleaning up their books. Get rid of some crap.
Yeah.
Okay.
Doesn't matter.
Yeah.
All right, so checking in on the market, Dow futures up 250 points, S&P 50 basis points, NASDAQ up 34 basis points. Bond market is relatively muted. Bonds down a little bit, rates inching higher. Gold flat, silver down a little bit, copper flat, oil down a little bit under 1%. Natural gas making moves up over 4%, and dollar pretty much flat on the day.
Somebody made a watch list. Hey, so Johnny Rockets.
This watch list is so old. I have 4 Qs on my QQQQ.
Johnny
Rockets watch list is.
Johnny Rockets announces 20 new Texas locations. Dude, why
Johnny Rockets still exists?
Why are there so many Red Robins where you live? I must have passed 10 Red Robins while I was in Pennsylvania. What's going on there?
I have no idea, but you do want to know a fun fact about Johnny Rockets? You know, in Scarface, in that scene, the chainsaw scene where they cut the guy in the chainsaw in the bathtub?
Yeah.
That building became a Johnny Rockets.
Miami history.
A little fun fact, a little Ocean Drive fun fact.
All right, let's take a look at our other free daily note, the chart report.
Yeah, great. Bumper.
I like the seasonality chart here. Just another way to look at a lot of the things that we're talking about. This is seasonally a very weak period, and we're seeing stocks relatively weak. This is Jay Capel, which is pointing out a sentiment trader chart. That one right there.
We have to get Jay on the show. He's also on my list.
Yeah, I don't know Jay personally. I don't know him.
Me neither. But Pat does. So
who doesn't Pat know?
I don't know. I liked the chart. It was all the way at the bottom, I think. I had 2 things I wanted to mention. No, it was it that one or was it that one?
What about Larry Thompson's chart?
Yeah. It was this
yields
one.
and energy stocks.
It was this one. Yeah, that was the one.
Larry's one of my favorites. Give him a follow.
Shout out, Larry. See what happens, Larry?
We've watched Larry grow as a technician over the past several years. He is absolutely killing it.
Yeah, and he's like one of those Phil Perlman, like healthy guys, you know.
He's super smart too. He's CPA by trade also, so checks all the boxes.
I also
does he hold a special place in your heart because of that?
For sure.
I also wanted to mention this. Patrick, the guy who edits the chart report, also does a weekly YouTube show called Trend Lines Over Headlines. He talked with Sam Rowe on Friday. I think this got posted on Saturday. Over
Patrick, that guy, Patrick.
Right. So highly recommend watching this. I have not watched it yet. I will probably watch it today. But Sam agrees, been on this show is great. And it's a really well produced show. So it's like once a week, usually on Fridays and Saturdays, they upload it, and it's fantastic stuff. So check it out. Trend Lines Over Headlines.
So
how about the macro chart showing the percentage of stocks with MACD sell signals? Great chart.
Where's that?
Macro charts.
Is it? I don't know. Spencer, I got a headline for you when we're done with this.
Why do you not like this chart? You know macro charts personally. Why are you beefing? What's your beef?
No, we have this internally. I love Robert. I love his stuff. But
first of all, he's anonymous, so you
right. I don't know who. Yeah, right. All right, whatever. It's a great chart. I love his work. He's got all the data. I think you could look at too much sentiment and not enough price.
First of all, this is not sentiment. This is an oscillator that's based on price specifically.
We were looking at a chart from Macro Trader the other day. That was sentiment.
All right, guys, get the chart report. It's free. It's a compilation of all the best charts and research from around the world of Twitter. Scan the code on the screen. Use the link in the description on YouTube as well, and sign up. It's awesome. It's fantastic.
I got a headline for you now.
I'm ready.
You always you look out for these types of headlines.
Yeah.
Have you heard about Tesla? You know what Tesla is? Tesla appointed, I can't say his name, as chief financial officer. So Zachary Kirkhorn stepped down as of August 4th.
You mean no. You mean the master of coin?
Who? Zachary Kirkhorn.
Yeah, they don't have a CFO. They have a master of coin. That's the CFO. That's the job title.
Master of coin. I mean, they're a fun company. I'm okay with that. So
no, that is no. I am very interested in that headline. Thank you very much. I did not see this, but it was out. I don't know, 9:00 this morning. I missed it.
Tell everyone what your usual take is on news like this.
Yeah, CFO departures interest me more than CEO departures, because CFO departures, sometimes it's innocuous. It's just a person retiring or whatever, but they know where the bodies are buried, right? So if a CFO is gonna step down, especially, and he's been there for a long time too, he's probably as well known as any Tesla executive not named Elon Musk, right? So that interests me. So yeah, they know where the bodies are buried, and you always have to ask yourself, what do they know, right? Why are they leaving, right? So yeah, these headlines interest me.
And you're not wrong. Most of the time, right, all things equal, right, if you're just given the information that a CFO left, it would be okay to maybe presume maybe there's some trouble there, right? Even doesn't have to be fraud, just trouble, right?
Yeah.
In this case, right, you have to look at a lot of things. Spencer, I think you already mentioned his tenure. He's been there for a very long time. He's made a lot of money. He's been paid in stock options. He might just be done, right? Fine.
Yeah.
The other big thing I would look at here is when there's evidence of like a toxic issue and a CFO is departing, they're bringing in an outsider, somebody who knows nothing about what's currently going on there, probably tricked him into hiring him, didn't tell him about the dead bodies that maybe you're talking about, right? You'll see something like that. They are promoting from within. The chief accounting officer has been promoted to the CFO. So he probably knew just about as much, or 99% of what the CFO knew. The chief accounting officer is literally next in line below the CFO. So just promoting internally, this seems like a very normal, thing for a business to do. And this guy's probably retiring.
Yeah. And also it just seems like to me very often when there is like mass C-suite turmoil, the CFO is always the first one out the door. Never the last one. They're always the first ones out the door. Right?
Because they see it. They see
it. Right.
They either don't talk about it and bounce, or they mention it and get fired.
Yeah. Anyway, all right. That interests me. Thank you very much for that. I did not see that. He's probably pretty burnt out, Michael, to answer your question.
It hasn't been an easy job, but I
would imagine.
Seems like he's done a great job.
Yep. Okay, what else was on my list here? I covered those. I told you about the Robinhood. You didn't care about that. We talked about what's moving. What's moving today?
I think what's moving today is that anything crypto is falling.
Things are falling?
What else is new?
Anything crypto is falling. Yeah, look at Marathon down 6% today. I hope it goes to 0. Riot down 5%. Coinbase down almost 3%.
I think we're getting an answer.
Bitcoin still stuck below overhead supply. It's nasty. It's getting nasty there, Spencer.
These look like resolutions of these short-term patterns that we've been watching for weeks now.
I remember being on the golf course with Strazza on Friday and being like, I don't give a damn what these crypto stocks do.
I was just going to say, JC was closing out merit calls from the links.
No,
Nice.
I was done. I was already out.
It was whatever. That would be cooler if you did it while we were golfing.
I know.
Looking ahead to tonight, Palantir, Paramount, Lucid Group, Ring Central are the earnings reports of interest to me.
You're interested in any of those?
Yeah, I'm interested in this.
Lucid, huh?
Yeah. Well, Lucid, I mean, they're not making money, but I kind of want to hear about.
Are those cars on the road yet?
I confess I have no idea.
Yeah.
But I want to know what they say about deliveries. Tico, just rewind to the about the half hour market.
Quick quick thing on Apple stock. Can I finally talk about the Apple market cap headlines that have become, so frequent over the past year?
Yeah. I don't know what you're talking about, so I am curious to hear what you're saying.
Everyone should know this because no one mentions this when they drop the Apple just hit 3 trillion headline, right? To get clicks and whatnot. We don't know what Apple's market cap is during the quarter. I saw somebody, one of these news sources came out and corrected like a prior news report after the Apple earnings had come out because they got the market cap headline wrong. In between a quarter, Apple is buying back stock and nobody knows how much. And when you buy back stock, you retire into your treasury account. So the outstanding share number is constantly moving and falling throughout the quarter. So we could sit here and for a headline say, hey, Apple's market cap is XYZ. That is an estimate at best. The only time it's not an estimate is as of the earnings report, which we got last week. That'll tell you what Apple's outstanding share count was as of June 30th, right? So you can go back to June 30th and try and calculate it then. But in between quarters, we don't know how much stock is being bought back, and therefore we can't make a perfectly accurate market cap calculation. Is that fair? So all of these headlines about Apple hits 3 trillion, maybe they did, maybe they didn't.
Who gets more excited about accounting than this guy? You see how excited he gets, like explaining the accounting? He gets very, very excited.
Every time I see one of these, okay, all right, we don't know. They buy back stock aggressively, and they're very tactical about it. They'll stop buying back stock, so it's hard to put a number on it in between the quarter.
Can I talk my book?
Fine.
Throw up slide 1. I've got some P&L in this name because we got in at a good spot at the low of the range, and now we're about halfway up. And I actually just added to positions this morning.
In what?
ABBV. This is ABV. Spencer, can I get slide 1?
Yeah, I got you. 1 second.
Slide 1. This is ABV. It was a nice entry point because the risk was so. One of the things that Mark Fisher said in this podcast, by the way, go listen to the podcast with Mark Fisher on the Compound and Friends. Listen to it twice. And one of the things he said is that if I don't know where I'm going to get out, I won't get in. You want to talk about where I learned things. This is a great example of that. We got in because the risk was so well defined. And now we're about halfway up to the upper end of the range. So I added to positions. I just bought some more right now. I actually doubled my position.
Wow.
Yeah, I technically doubled my position. Yes. So, I think we get back up to the upper end of the range, maybe even continue through that. But we got a nice little bull flag here on a trade that's already working. So I'm adding to this position. This is not technology. It's healthcare. I still think that we're going to get more rotation into those. So that's the sitch. So talking a little book. Anything else you want to bring up there, Strazza? Should we move on to a little recess?
No, I just want to reiterate. I love it. I love AbbVie. This company is one of those dividend stocks that we screen for. We've had it on the Young Aristocrats list. I think it might have graduated. They've been consistently raising since at least 2016. Just pulling up the data quickly here.
I love how they got spun off from Abbott Labs, and now this is bigger than Abbott Labs.
Listen, this company kills it. It's a secular leader, pays a nice yield, consistently grows that yield, all the right fundamentals. Good name. Good long-term name, in my opinion. I got to go get something for recess. So,
All right, wait. While you do that, we had a few questions from the chat, and we have charts for them, but I have to find them now. Fonz,
got my haircut? If it's not, I'm leaving.
No. It's God, where are these charts, Fonz? I can't even find them.
JC was right again about Apple. Okay, all right.
It's just math, bro.
It's been one day.
It's been more than one day, but.
Oh, slide 2, 3, and 4. Thank you, Vet. Okay, so wait, we had a few questions. Apple, which we just talked about, yeah, and then somebody asked about
Apple's getting oversold.
Wait.
That'll get my attention.
Apple is in the process of potentially getting oversold, but that gap is nasty, bro. That's going to take a long time to repair. Like these tech indexes aren't going nowhere, so that means that the S&Ps aren't going nowhere either.
That oversold reading happened fast.
Dude, that thing is such a mess. It's going to take quite some time to repair. Probably won't even happen this year. So if you want tech, good luck.
What you're talking about is the character of the sell-off, and you're right. This
That's
is
nasty.
the last 2 days specifically of price action have been gross, and you've seen it in momentum absolutely falling off a cliff. Momentum shouldn't get oversold that fast. I mean,
Yeah, I hope it goes to zero.
All right. Someone asked about NXE.
Listen, uranium is a cool place to look for opportunities. I love everything that Larry said today. We could have gone another 15 minutes talking about just uranium. I like this space. I think it's interesting. I think this
Small cap uranium.
I think this will be a big trend for a long time.
And the last request we had was regional banks, I think.
Still working on it. You know, this rotation into cyclicals. You know, there's no evidence that it's going to be, or I should say no evidence. There's little evidence that the selling is going to expand into other areas outside of mega cap growth. Maybe it does, but we haven't seen it yet.
The reversal is in. This is a huge chart. What is the biggest takeaway from this chart? These
Rates
are the
going
worst.
higher.
No, not even that. These are the worst stocks. Literally the worst stocks. What were the worst stocks this year? Do you guys remember March? Go back and read some newspapers from March. Like, this was bad for regional banks. Reversal is in. The trend is now higher for the worst stocks.
Well, it's a good reason why we don't read newspapers, because they were telling you, the newspapers were telling you that we were in a banking crisis. It's been the exact opposite of a banking crisis. The only crisis is in the portfolios of people who listen to those newspapers.
We got 3 minutes. I'm going to go get
All right,
ready.
recess.
Recess, hit it.
I have a thing.
All right, Spencer, what do you got?
I like watching documentaries. It's a hobby of mine. I watched one last night called Glitch. It's on HBO or whatever the hell they call that thing now. About JC. Remember HQ Trivia?
No.
All right. In like 2018, it was this viral app. I know the chat remembers it. It was the hottest app of the year that year. It was a live trivia game show. You could play on your phone. You could win money. You would win like, $10, right? If you got all the questions right. And it was like the most viral app of the year. And then it just imploded. And Glitch is the documentary. It's the story of that. Very interesting, just like rise and fall of a viral app that crashed and burned. You guys remember HQ? Come on, everybody was doing it. Everybody was playing HQ Trivia in 2018.
Nope.
It was a fantastic documentary. If you're into business or tech documentaries or just documentaries in general, I highly recommend it. Ironically, they shut the app down February 2020. I think if they had just held on a little bit longer,
They would have crushed it.
all right, HQ. It's called Glitch. HQ Trivia. It's a great story if you want to learn about how a startup can go viral and then just crash and burn in a matter of months.
Went to a mall this weekend. Yesterday, I was at a mall, and I hadn't been to a mall in, I don't know, 20 years, maybe more. I have no idea how long it's been since I've been at a mall.
Yeah.
It's been a long time. And I was at the King of Prussia mall.
That's a big one, isn't it?
And it was like an airport, dude. Seriously.
Yeah.
It was like an Asian.
I've heard of
It was
that.
like an Asian airport, because you know how some of these Asian airports it's like a mall. It's like that. I got to tell you, I was impressed. I never thought I would say this. It was pretty cool. I got to say, I was in and out. I had to go to David Yurman and exchange some jewelry for my wife. I picked up a Thule as well at Rack Attack in King of Prussia. A Thule, for those of you who don't have kids, Thule is the thing that you put on the top of the roof, like those storage bins. If you have a wife that overpacks to go places, you're going to need one of these.
It goes on the top of the car.
It goes on top of the car. You fill it with stuff. It's called a Thule, and it's so light, dude. This thing is like literally the size of the car. It's humongous. I got the XXL. You can carry it with one hand. So light.
Awesome.
Who knew?
So, I'm so tired of explaining to people malls in America, because I got to tell you, in Asia, one of the biggest like recurring themes in every place that we went to was malls are booming over there. Still, it's never changed. Yeah. That's the hangout. It's like the town square. They're nice. They're huge. They have great food. We went to a mall in every country we visited, because that's where you're meeting people to do different things. So I thought that was interesting. It's very different, obviously, where we are. So good for you. For
What's this? What's this jersey we're wearing? What is this?
Well, yeah, I'm going to go now. So it's football season. I'm so excited. I was just back up in Connecticut for 24 hours, one day. But I got all excited for football season. I got plans to go to some games now. We're going to a game in like a month.
I got tickets. I got the tickets last night.
It's 1 month away. You got my ticket or no?
I got you.
All right.
Who's better than me? Come on, Strazza.
It starts in 1 month. They already kicked off preseason with the Hall of Fame game last week. I missed it because who cares about the Jets? But I'm psyched. Football season's going to be a blast.
Yep.
Going to the game November 26th. Giants-Patriots. Can't wait.
I'm going to the Dolphins Giants game in Miami, by the way.
That's this year?
Yeah, it's a bachelor party. I don't know if you want to crash it. I could probably sneak you in.
You don't want me to meet all your friends?
Nah, it's a faux pas.
No, I'm literally inviting you to meet all my friends.
You know
I'll go, depending on when it is. I got plans. I'm a busy guy, but sure, maybe.
Okay.
Up to.
I think it's October 8th.
I've never been to a Dolphins game up there.
Maybe you should.
Yeah.
Maybe you should. We got a suite. It's pretty awesome. You should probably come. And they're all Giants fans who I'm going to be hanging out with. So.
Oh, they want me there then.
Yeah, they do. They don't want me there.
Well, what a nice time I had in Connecticut. Nice visit. Hung out with JC in Pennsylvania. Got to see my parents and my family in Connecticut. So it was a great week for me last week.
Check out this comment from Neil in the chat. I get this. He said he's talking about the people in Asia going to malls a lot. Many of them live in small apartments, so it's the only way they can get outside and hang out and congregate, right? Because they can't have parties over because they live in a small space. So
it's also hot outside. Very hot outside.
All right. That'll be a wrap. Thanks to our guest today, Larry McDonald. Thanks to Kimmy Sokoloff, as always. Thanks to all of you in the chat. If you're watching us on YouTube, do me a solid. Just real quickly, hit that thumbs up button. It takes a split second of your time. If you want to also subscribe to our channel, we'd appreciate that as well. Follow us on all the socials. It's up on the screen right now. We're on all the socials. We're on the X and the Twitter and all that stuff. And that's it. So go make some money, and we'll catch you guys later. Have a good one.
Adios.
Peace.
Run it. I can't take no loss. I don't even know what it costs.